Okay, in this video, we're going to review what price cycles are and how price bounces between each level, the price cycle high, price cycle low, and price cycle equilibrium. And I'll just show you the main cycles that I use and then other cycles that you can use in your own trading, regardless of the strategy. So price cycles, something such as 23,000 to 24,000, that would be one price cycle. You can divide that price cycle up into 5 segments: 23,000, 23,250, 23,500, 23,750, and then 24,000. You can also divide that up into the 100 levels. So 23,100, 23,200, 300, etc. And then within each of these cycles, so these are the main cycles you're going to want to use from 23,000 to 24,000. Within each of these, you can divide the cycle in half. Okay, so if you divide 23K and 24K in half, you're going to have 23,500. 23K, divide that in half from 23,500, you're going to have 250. Okay, you can take that one step further. So let's take 750 to 24K. So the midpoint there would be 875. All right. That would be your midpoint between these two. Okay. Same thing with these. 150 would be between 100 and 200. 250 between 200 and 300. And then the way they interact, so you're going to, let's just say price is at 24,000. We're going to go to equilibrium. So let's say we go to 23,500. So price is going to go from the high of whatever cycle you're looking at to the equilibrium of that cycle. And then from the equilibrium, it's either going to go back to the high or down to the next cycle low. Okay, so from equilibrium will determine how price continues. It'll determine the order flow of price from the equilibrium of the cycle, whatever cycle it is, which might be a little confusing, but just remember this little diagram because it will help you once you grasp the actual idea of price cycles. Let's get into an actual chart. So I'm going to delete that, and then let's just look at last week. Okay. Let's look at last week, and we had some pretty good movement last week within the price cycle of 24,000 to 23,750. Okay. So I have this divided out from 24,000 to 23,000. And then where price is, we're closest to like 23.5, 23.750, 24, 24.250. I'm not going to mark them all in the chart at the same time. There's no reason. But I'll get the ones that are relevant for that week. And this week we had this. So 24K, 23.750. Equilibrium of that range is 875. And so let's go over how price bounces between the price cycle, highs and lows, and the equilibrium. So from here, we go from 750 equilibrium, we close above. Once we close above, use it as support, we're thinking the next target is 24K. Okay, we get to 24K. From here, I'm thinking one of two things. Price is either going to reject and go back down to 875, or we're going to get above it, close above it, use it as support, and run to the next cycle, which would be 250, okay? Or equilibrium of the two, 125, okay? We close down below 24K, next target, 875. Doesn't have to be a direct shot, but in my mind, what I'm thinking is, okay, we don't want to get above 24K. The next number, the next price cycle, the next important zone we're going to hit is 875. Okay, so what I'm thinking is, possibly take a short down to 875 or take a long from 875 back to 24,000, just as like a mental framework. So what happens? We go from 24K, bounce around, drop into 875. Once we get to 875, I'm thinking from here, I want to use it as resistance and go down to 750, or I want to use it as support and run back up to 24,000. What do? Price gets above it. We run back to 24K. Same thought process. We're here. I'm either going to use it as support and run higher, or we're going to revert back down to 875. Wicks into it, right back down to 875. From 875, same thought process. We're either going to trade down through it to 750 or go back to 24K. And what happens? So we come down, we hit it, we bounce around, back to 875, back to 875, back to 875. We're just working that level now. And we've already hit 24K twice. And what we do, we eventually hit it one more time. We roll over, close down through it. So once we close down through 875, we come back up, test it as resistance. Next target, 750. And that ends the week in consolidation. Okay. Now, this isn't an exact science like, okay, let's just short 24,000. Let's just long 875. I just use this within the overall strategy that I trade with reversals, and it works well with these numbers, with these price cycles, because once price gets to one of these numbers, I'm thinking there could be a reversal. And there likely is. If you look in just this week at how many reversals there are on these numbers, just these numbers, we have 1, we have 2, we have 3, we have 4, 5. Let's just call that as 1 there. 6, close down through it, 7, back down into here, reverse out of that 8. Okay. So not all of those are trades. Hardly any of those probably were trades for me. I only took one trade this entire week, which there were other trades. I just didn't take them. I missed a couple. I missed one other trade that was within the protocol, but other than that, there just wasn't much that hit my protocol. But you can use this regardless of your strategy, okay? It works well with mine. And so within this, you can get even more detailed. So let's just drop down to like the 3-minute chart or something. And then we can review the other cycles. Okay, so within this cycle here, 875 to 750, you're going to have those other cycles as well if you want to use them. I stick to the big ones unless we get into real tight ranges. But so from here, you're going to have 850. So let's mark that out to 900. Make these blue, or let's make these red, because they're different cycles. Back down to 800. Let's make this one green. Let's just remove 875 for a second. So what I want you to see is this cycle, okay? So this is a 100-point cycle as opposed to a 250-point cycle. So we have PXH, we have PXL, we have equilibrium. Okay. We have EQ, PXL, PXH. And then same scenario. Okay, so if this is your intraday chart, we're here, we close down through 900. Next target, 850. We work 850, close down through 850, next target 900. Next target 800. From 800, we have 750 below. We don't hit 750. We come back through 800. Next target 850. We go higher, come through it. We're thinking we could go to 900. We don't. We reject, come back down, close through 850. Next target 800. We work it, run higher, run lower, consolidate, close through 800. Next target 750, 750. From there, we work 750, close back up through it. Next target 800, 800. From 800, we work it higher, lower, close down below. We're thinking we could possibly go to 750 again. We don't. We chop into the week, consolidate, consolidate, consolidate. And notice, this is Friday in the summer at the end of the week of a pretty decent week, of a CPI week where we had some pretty good expansions. So we hit that draw on liquidity at 750, back to 800, and price wants to settle around 800, okay? The market makers want to settle price around 800. We're not touching any other level, okay? So let's see if we can use this price cycle again. Let's just go here, okay, close down through it, 850 down to 800, back to 850, back to 900. Okay, 900 takes us up to 950, back up to 24,000. Can use it here. Okay. 800, reject, down to 750, back down to 700, back down to 650, all the way back up the ladder. It's just like a ladder, you're just climbing the ladder. Okay. Get above 800, support, next target 850, support, next target 900. Okay. It just works its way up and down the price cycles. Now those are a little small. Okay. Like if you're going to scalp and take like really short positions and short trades, you can use those numbers. I don't typically use the 50s and the 100s for like an overall draw on liquidity. I'll mainly use these levels here, like the 875. I'll have some distance in between. That way I can frame a really nice trade for at least 100 points or so. And that will do the trick. So let's put that back at 875. And you know what I mean? So like I want to frame a trade maybe from 750 up to this midpoint, and then from that midpoint determine, okay, are we heading to 24K or the midpoint between these two, or are we going to revert back down to 23,750? So, typically, 120, 150 point trade, like that's what I'm looking for mainly, like a larger swing, like a larger like New York session swing, such as like this, like 9:30 opens and we drop 100 some points. Like I like to get over 100 points on a trade. So I'm not going to be like micro scalping like 950 to 900 or anything like that. The way I'll use that is within a trade. So let's just say we have this 950 level marked here, and I want to take a short from here. Okay, we're not at the 24K. We're not here. We're here, but it looks like a good short. We have all the protocol that lines up. Take the short. We're getting under 950. From 950, I want to see it go to 900. No problem. Hits 900. Has no trouble with 900. So we want to come down into 875. Okay, that would be like the larger swing point in the price cycle is 875, because remember we're working 24K to 23,750. And then from there we run higher. And so what I will look for that to do is say we have 900, we take 900. I would look for it to go to 950. Once we get down below 900, we take it down to 850. 850 down to 800. So I'll just make sure my trade is working the lower price cycles. It's sort of an art, honestly. Like, it's not super straightforward. Like, I would suggest sticking to the higher time frame, the higher number price cycles, because you can get chopped up on these lower cycles, like this 950 level. Price can chop back and forth between 900 and 950 multiple times in the same session. But just as a rule of thumb, if you're looking to take a trade, looking to take a reversal, and you're not at a price cycle number, like a 24K, a 950, a 900, an 875, an 850, whatever the cycle you're looking at, you want to make sure that you're near a cycle. You're near a cycle high or low, or an equilibrium. See, 800, tap it, reverse. All the reversals typically happen within a nice round number, okay? 75, 950. It goes on and on. Just do the research yourself, and then you'll see that these numbers are super important, okay? But hopefully that gives you an idea of how I use the price cycles and how you should use them in whatever strategy you trade.